If you watch social media at all and you're looking at real estate, you will have run across the people who are the doom scrollers, the people who tell you that everything is crashing and burning. The crash is here, and they try to freak you out. They use fear. But what if the opposite was true? What if the actual stats are showing us that maybe we're starting to get back to pre-pandemic levels? Interesting. What does that mean? So today I'm going to break down how that looks nationally and how it looks for people here in Arizona. What's up, everybody? Welcome back to Real Talk Real Estate. I'm your host, Mark Cannon, local realtor here in the Phoenix area with my home group real estate and owner of the Benchmark Real Estate team. So as always, guys, this is a podcast format. I'm just trying to be real with you, trying to give you accurate information. I don't make money on this channel. My motivation is just to give you resources so that way you can make the best decision possible. So we're going to talk about, are we getting back to pre-pandemic levels nationally and locally? So I'm going to talk both. I'm going to show you national numbers. I'm going to show you local numbers because I'm here in Phoenix, because real estate's local, it's not national. The national numbers are good to see, and it's good to understand those, but local also matters. But if you're watching social media, you'll have seen the doom scrollers, the people who put out the fear porn, who are just trying to freak you out because their whole motivation, they're influencers. That's how they make money, is by their channels having lots of followers and likes and clicks and all this stuff. And that's their motivation, is to keep putting more and more of that out. And it doesn't matter if they're right, they just keep putting it out. And so it's one of those that I'm going to show you some actual numbers that we're just like, hey, like, it might actually be as bad as you think it is. Some markets, yeah, they're going to be in buyer's markets. Some markets, they're not. I actually have some maps to show you that's going to show you that nationally, where you're like, oh, I didn't realize that. Because if you watch that stuff, you'd think everywhere is a buyer's market and everything's just going down. That's not true. There are a lot of sellers markets in the States right now. And people go, wait, really? Yeah. So I'm going to show you that. I'm going to show you everything. A lot of these charts are from my coaching company, Buffini and Company. Brian Buffini does a bold prediction show twice a year. He did it in August, and then he's going to do it again in December for 2026. So I'm just going to go through some of those slides, show you some of that stuff, some of those resources. If you want to listen to that whole broadcast, there is a link in the description, so go check that out. So let's get into it. I'm going to be pulling stuff up on my screen to show you guys. First thing we're going to do, and this is where we're first going to start off with what looks like 2019, what looks like pre-pandemic levels. The first thing is inventory. Inventory in 2019, 1.24 million homes on the market. Okay, when we look at July 2025, 1.1. You can see the drop in between. Because realize, with real estate, it's about supply and demand. If supply is low and demand is high, the prices go up. And that's what happened for the past 4 to 5 years. Is supply was low. Well, I wouldn't say the past 4 to 5 years, because we've kind of gone down in 2023, 2024. But at least here in Phoenix, we did. But when the pandemic hit and a lot of things happened, you saw home prices just skyrocket. I'll show you a chart for that here in a second, so just hold on. Existing home month supply. So month supply is important because that shows you how much inventory we have. When you look at June 2019, 4.4 month supply. June 2025, 4.7 month supply. Pretty similar. Good to pay attention to. Another thing that's very similar, days on market. 2019, 27 days on market. 2025, 27 days on market. We're kind of looking like 2019 in some facets. Now, some of the things I'm about to show you are not like 2019. They are in a little bit maybe, but not, because the market's changed. And I'm going to talk about why. So the first thing is obviously mortgage rates. Mortgage rates were very different. You look at 2019, 3.75, 2020, 3.01, 2021, 2.8. I refinanced one of my homes at that point, and we'll never see rates like that again. At least I don't think so in my lifetime, unless the government wants to mess everything up. Like I always say, the government can mess it up. But it's one of those that we obviously went up in 2022, 5.3, and then we've been up in the sixes since then. And it's interesting. If you look back since, I think, the 70s, the average interest rate since the 70s has been around 7%. So just use that for, a mindset of, oh, that's where interest rates have been the past 40 years. We got used to about 10 years of low interest rates, and that wasn't normal. So that's one thing that's different now. Another thing that's different is the median home price. July 2019, median home price in the country was $315,000. July 2025, $440,000. And you can see the past 3 years, we've hung pretty steady. And that's nationally, again, national numbers. And it's like, oh, interesting. So we're not having a crash. We're not having a major correction nationally. Interesting. Good to know. Part of that, as we saw from like the month's supply and everything, is we still don't have tons of inventory. 08, 09, we had so much inventory across the nation that they couldn't handle it, and that's why the market crashed. We don't have that right now. We're not close to that right now. If you look at existing home sales, this is different because 2019, 5.34. Again, those 3 years right there, we had lower interest rates. 2022, and now we've been hovering 4.09, 4.06, and this year they're forecasting about 4.16, a little bit higher. Why is that? It's because of interest rates being higher. It's because of inventory being higher. Prices have not really come down to total affordable levels yet in most places. And that's where it's like, okay, like because affordability's not that good right now, people aren't buying, they're waiting. People aren't selling because they have a 2% interest rate. So that might change as interest rates start coming down. So another thing to look at, new construction month supply. 2019 is a little different, 6.3. Today we're at 9.8. Again, that has to do with interest rates, has to do with inventory, has to do with a lot of that stuff. So now we're going to get into a couple maps just to show you some maps. And I thought this was interesting. So I'll show you this map and then I'll zoom in so you can see them. But we're showing a buyer's market, a neutral market, seller's market, and strong seller's market. And you go, wait, really? Yes, there are strong seller's market in this country. And people don't know that. People think we're in buyer's or neutral market across the country. And that's not true. So let's talk about the buyer's market / neutral market. As you can see, these dots, now these are cities. Okay, these aren't like representing the whole state. They're showing cities. So usually it's the larger cities in a state. So you can see buyer's markets. Florida has a lot. Florida has a lot because, again, and I've talked about this in other videos, during COVID, people from California, Washington, a lot of those places, when they moved, where'd they go? They went to Arizona, they went to Texas, and they went to Florida. Let's see where the buyer's markets are. Oh, look, Texas, Florida. Now, I think there's a little dated. He said it on the broadcast that these dots and stuff are a little behind. Phoenix shows as a neutral market, and there are neutral markets here in Phoenix. And so, but I think there's probably a little bit more buyer's markets here in Phoenix, and I'll talk about that at the end. But it shows us as a neutral market. So we're either in slight buyer's market or neutral market for the whole Phoenix Valley, right? But you look at all those neutral markets. There's a lot of neutral markets. Now, what's a neutral market? There's no advantage to buyer or seller, okay? And so that's where there's just normal negotiation, a normal market. Okay, so we have a lot of those. So now let's go to the seller's markets. And people go, no way. There's no seller's markets. Oh, no, there is. Seller's markets. Northeast has a lot of seller's markets. California, I feel like it's always a seller's market, right? But you look at strong seller's markets. Minnesota has one. Michigan has one. And then you've got New York. It's around Pennsylvania. And then up there in the Northeast, you got a ton of strong seller's markets. And I know that because I talked to some of these realtors that are up in those areas. And they're like, yeah, we're getting multiple offers. And I'm like, really? Because again, here in Phoenix, we're in a buyer's / neutral market for the most part. Like I think like Chandler, Scottsdale, Paradise Valley are in seller's market still technically. I'll show you that data here in a little bit. But I'm going to show you Brian's bold predictions real quick. And he's kind of predicting what's going to happen. And now he's been fairly accurate. I've been watching him for several years now, and he's been fairly accurate where he's pretty close. Now there's a couple things he's gotten wrong, and he's owned it. He said, listen, I got it wrong. But that's because certain things happen that they just didn't see coming. So here's his bold predictions. 20% drop in NAR membership, so 20% less realtors, which here in Phoenix, we need that because we have a lot of part-time realtors here. Existing home sales will increase 3% by the end of 2025. New home sales will increase 5% by the end of 2025. And we've started seeing that a little bit here in Phoenix because I'm starting to see them offer like 3.99 interest rates at new home builds, and they're just going. People are buying them. Now, they're a little bit farther out, so people have to be willing to do that. Median home prices will increase 1% by the end of 2025. Mortgage rates will hover between 6.25 to 6.5. Now, the key word there is hover. Right now, we're just above 6.5%. I've been saying this for a while. I think we're going to be around 6.2, 6.3 near the end of the year. Because I think we'll slowly come down because we've, again, followed the 10-year Treasury, not the Fed. So just realize that, to me, the 10-year Treasury kind of pre-bakes some of that stuff in. But one of the things Brian talked about was when mortgage rates drop from 7 to 6, which is happening now, 5.5 million additional homes will be eligible, households will be eligible to buy, including 1.6 million renters. Now, does that mean that our transactions are going to go up that amount? No, not everyone's going to buy. People are going to still wait. But based off the research they've been doing, when mortgage rates drop like that, they expect another 500,000 home sales. Probably going to happen next year, in my opinion. If interest rates come down next year to 6% or even lower than that, into the fives, I think you're going to see people come back in the market. Even sellers, because some sellers are going to go, okay, now I can maybe buy down my interest rate, get in the fours, and be okay. So that's something to be paying attention to. Now, I'm going to go into some data for Cromford. So let's talk local real estate. So if you've been waiting for this and you're tuning in now for the Phoenix stuff, let's talk about Phoenix, because Phoenix is a little different than the national averages and the national medians and all that stuff, because our market is more volatile. It's way more volatile. I'm going to show you a lot of different charts. So the first one I'm going to show you, I'll start with some of the numbers that are different, and then I'll start showing you some of the stuff that's positive. So let's pull up our days of inventory. Days of inventory, you're going to see here it's higher, right? It goes all the way back to 2014, and we are higher than 2014. Now you can see we came way down in inventory, because when you actually look at Phoenix was very, very affordable. And that's why we've had such a great market since pretty much 2014. 2014 on, we've had a really good market because our homes were cheap here. And that's why we saw such a large jump. And I'll show you that. So that's the days of inventory. When we look at, let me pull it up here, median home prices for Phoenix. Now, this is Maricopa County. Sorry, not Phoenix itself. This is Maricopa County. You look 2019, the median home price, and we want to go off of median, not average. Median home price was $272,000. Today, $465,000. And you can see it's kind of jumped around a little bit in recent months. So it's one of those that you've seen it move around, but we've been hovering around $450,000 to $470,000, somewhere in that range. We've been hovering. And you look at it, I mean, that's $200,000 more than where we were in 2019. So that's the thing, is homes were very affordable. Pre-COVID, pre-pandemic, homes were very affordable here, and that's why we were building a ton. People were moving here, and then when COVID happened, tons of people moved here, and that's why we had no inventory. No inventory. Oh, that's not what I wanted. Let me show you month supply. So month supply, I went back to 2010. You can see the month supply goes up and down because we have seasons that, we have seasons here where it's like, okay, people are going to buy, people are not going to buy. Our hot time is pretty much like, I'd probably say September, October till April, and then it starts slowing down for the most part. But you can see month supply was really low, 2020, 2021. Now we're back up. It shows right now at 3.6 is where we're at. So that's actually a little bit lower than the national average, 3.6. So interesting with the month supply there. Let's look at something else. Let's look at the annual sales. I'm going to show you two different charts. First one I'm going to show you is the annual sales since 2019. So as you can see in Phoenix, it's the same thing as that kind of happened nationally. Everything slowed down. And I'm pretty sure that would probably be true of almost every state. Where we saw it slow down. 2019, you can see it was up there above 80,000. Now we're just shy of 60,000. Okay. And a lot of that, again, has to do with inventory, has to do with interest rates. People can't afford it. Affordability is not very good right now. So let me go back, though, to put things in perspective. I'm going to go all the way back to 2001. Now, some of those colors you're going to see is REO, short sales, foreclosures. That's what that stuff is, right? Those different colors. The blue, you can see right there, 2003, the build up, 2004, 2005, then 06, it just dropped off a cliff. You can see compared to like 2021, 2022, we went down, but we didn't drop that far. And the prices didn't crash because it was different circumstances. Those doom scrollers always say that stuff, but they don't pay attention to the circumstances. And so it's one of those that we are lower now, but let's see, I'm trying to go across the map here. We're about 2013, 2014 levels of annual sales rate. Okay. And I'm just trying to put that in perspective for you. So let's talk about some positive things. So I'll show you this listings under contract. This is weekly numbers. You're going to see that it's jumped up for the past several weeks. It's jumped up. And we've seen that because when we look at inventory, our inventory is dropping. We were at like 26,000 homes in the market. We consider about 25,000 a balanced market, a good market. We were at 26,000 homes. Well, now we're below 24,000. and we've been dropping some. Some of that is due to listings expiring or being canceled, and some of it is we're seeing contracts go up like this. And that's going to show here in this last slide from the Cromford report. Remember, 90 to 110 on their scale is a balanced market. Anything above 110 is seller's market. Anything below 90 is a buyer's market. Now, I typically take some of this with a grain of salt. I think we're mostly in balanced markets and buyer's markets. So if you look like below 90, Peoria down is all a buyer's market. And you've got like, I'd consider Mesa a buyer's market. And then you've got like Gilbert, Phoenix, Glendale, Avondale in more balanced markets. But you look at all the green arrows on there. We haven't seen that many green arrows in a long time. We've seen lots of red arrows. Now we're seeing green arrows where we're starting to see changes in the market where people are starting to buy again. And that's a good thing. I think as we see interest rates go down, as Brian talked about, as we see interest rates go down, we're going to see people come back in the market. Now, I'm not saying that we're going to get back to 2021 numbers. We're not, okay? That was a crazy market. But I think we're going to see it slowly start correcting. Like here, we've been correcting. Prices have been correcting. They're going to continue to until we see those sales uptick. And once supply starts getting too low, now it's going to start switching to balanced market, seller's market, where it's harder to negotiate. So if you're thinking about buying, personally, this is my thought. I think we're near the bottom right now. I think we're near the bottom of this correction. And once interest rates keep coming down, you're going to see people start coming back in the market. And it's going to be harder to negotiate. So if you're thinking about buying or selling, I would love to talk with you. I'd love to sit down with you, talk about your goals, see what you're thinking. Because for me, it's real estate through relationships. It's about what's best for you. I'm not really worried about a transaction. I'm worried about the relationship, making sure you're taken care of, making sure that we're making the best decision for you. So I'd love to sit down with you, take you to coffee, see what your goals are. I hope you'll reach out to me. My information's below. Guys, you've been listening to Real Talk Real Estate. I'll catch you next time.